Hey, good morning, everyone. Happy Friday. Welcome, Trade Pro and YouTubers. I hope everyone's having a great Friday, March 10th today, and we do have a decent bit to talk about. Today was a non-farm payroll event that happened here pre-market that we were just trading in our free live Discord community at tradeproacademy.com. So if you guys didn't check that out this week, today's the final day of that trading. So after this, come check that out. We're going to be trading live in that room. Pretty good overall, right? I was looking for the short side, pretty much just continuous repeat shorts to see if we can break some of these levels at that 37.38. So we'll see if we can continue those trades throughout the morning session. But talking about NFP and also Silicon Valley's bank, that's been making crazy news as of yesterday after the asset is down about 90, almost 90% in two trading sessions. So very, very big news and a lot that's going on in and around that. So first and foremost, I do want to talk about that non-farm payroll event. That I had a different outlook on it from what necessarily happened. So we had last month. So the January report itself came out at a very, very shocking beat. 517,000 jobs were added in January, quote unquote. And this time we were expecting 255. Now I was expecting to see an increase in those jobs added from the 255 expected, like maybe 300, whatever the case was. They came out 311, right? 311,000 were added. And based on that, with stronger economic data, right, a tighter labor market, I was expecting to see that the rate, the 50 basis point hike, would increase in probability. In fact, it did decrease, which prompted a rally in the market here pre-market, and we'll see how that kind of shapes up. So unemployment figures rose as Jerome Powell was expecting, and we also declined in the average hourly earnings, except for the headline figure. The non-farms did go up, putting downside pressure on rate hikes to come in 2 weeks. So we'll see how that shapes out. But right now, I don't necessarily believe too much in this upside in this market. I think that I was looking for a buy stop run that I was mentioning to our people into the 50, right? Maybe the 35s 50, and then start pulling lower. So with that being said, I think that that area is holding out extremely, extremely well. I'm going to give you some levels and some things to talk about or to take a look at here as we get ready for the day. But the main event is another potential banking crisis with ticker symbol SIVB, which is Silicon Valley Bank. They have also SI, right? Silvergate Capital. They've also seen a massive, massive downturn over the last 2 days, right? SIVB, it was trading at 270 odd dollars a share 2 days ago into the close. Yesterday it closed at 106, and right now pre-market is down at $39. So what the hell is going on? Silvergate Capital, it's been doing extremely poorly as well, but it started its gap down a very, very long time ago. SI, keep in mind, this is a stock that's trading at $3 right now. SI, to give you a perspective, in the peak of the 2021 massive rally, it was trading at 230 odd dollars. And so that's a very substantial decrease in the asset. So what the hell is going on, right? A lot of financial names got beat up. So SIVB, which is the parent company to SI, right, tumbled 60% on Thursday session, dropping into the after-hour session another like 60% or something. So massive, massive panic quickly spread into the broad market as bank shares across Wall Street reacted to these developments and pushed the S&P financial sector XLF down drastically, the worst dip drop since June 2020. So stirring up a lot of fear among investors, SVB Financial Group announced that it would raise $2.25 billion in capital throughout two offerings and a private placement. So the money would go to shore up its balance sheet, which was dented by the sale of a loss-making bond portfolio that consists mostly of U.S. Treasuries. And the bank apparently lost $1.8 billion on this trade as it rushed to sell off its low-interest bonds with an inverted yield curve, creating headwinds for those that are borrowing short-term and lending long. So what the hell does this mean? What had necessarily happened, right? Why is this such a big thing? Because realistically, banks, they're supposed to do well in a higher rate environment because they're pumping out loans at a higher price. Now, this will happen. In 2021, SVB, they got a massive, massive influx of deposits, right? At the end of 2021, there were about $61 billion. By the end of 2019, sorry, by the end of 2019, this influx was about $61 billion, right? That was the average. Now, by the end of 2021, it was nearly $190 billion. So as these deposits grew, SVB, they couldn't grow their loan book fast enough to keep up with this, right? And generate the yield that they wanted to see on this capital. So as a result, they had purchased a massive, massive amount of mortgage-backed securities, over $80 billion. So these are these deposits are hold to mature in the hold to maturity portfolio. So 97% of these mortgage-backed securities that they bought, over $80 billion, were for a 10 plus year maturity, right? Duration, which had an average yield of 1.5%. So after that, when the Fed starts raising rates, right, from 2022 into 2023, these mortgage-backed securities plummeted drastically. So this is because investors can now purchase long duration risk-free bonds at from the Fed at 2.5 times the yield that they were getting. So it's not necessarily a liquidity issue as long as they maintain their deposits. Now, clearly, they can't maintain their deposits. That's why they sold off $21 billion of assets, right? Which caused a massive loss, a nearly $2 billion loss, right? So this is where a lot of this panic came from, right? The situation that they found themselves in. So this situation isn't necessarily very rosy once you read about it this way, right? It's not just what you see on investing.com or whatever, right? You have to understand where this came from. So with that, there's a lot of backdrop, and a lot of their deposits, they're not like corporate. They don't have multiple different sectors like Goldman Sachs, JP Morgan. A lot of their clients aren't big businesses or businesses in general, right? So keeping that in mind, they can't keep up with these deposits, forcing them to sell off these assets that they were ideally holding for a 10-year long duration, but naturally the yields, they're not making sense. So downside continues. The asset itself is currently, I believe, halted, right? It's halted at $39. So we're gonna see when it unhalts what happens. They're expecting to release some kind of news. So this is putting a big drag on the financial sector, and we could see more downside overall in the market. That's why I'm leaning a little more bearish, and I'm gonna give you guys some levels here. Levels that we were shorting were the 37s on the S&P 100 futures. It's a huge area, massive top of a distribution block here from the value that was created. Down below, we have a lot of stuck shorts at the 29, so that's an interesting region. But at 25, you have a massive, massive stuck short at the 25 that accumulated there as well. So under the 25, you're going to see a pretty big potential move down into if you can accept the 18s, the downside is really going to open up. So keep an eye on the 25, on the stuck shorts at the 25, and the tops at that 38 region. Those are two main areas that we have to keep an eye on in the S&P 500 futures as we start this session. So I'm still looking for a little more of that downside, but we have to break under that 25 for those shorts to open. So that's the main thing that I'm looking at. The downside, the targets are going to be the 10s, the 3900s, and the 85s. The 85s are a top of a distribution. So if we accept and close under that, the bottom of the distribution, 3820, is in sight. Now, 3950 is a massive area that we had sessions ago. There's potential for longs to try to push into that area, but I think it's going to be very hard for the price to actually move above the 50. So I'm still leaning a little more bearish after this report, right? Tides kind of change, but we have to keep into consideration what is going on with the financial sector and overall risk equities. So that being said, I want to wish you guys a happy weekend. Uh, I hope everyone enjoyed that week in our Discord, in our free live Discord. We were talking trades, whatnot, blah, blah, blah. A lot of trades given. So go check that out. Community.tradeproacademy.com. Today's going to be the final day. Hope to see you guys there. We're going to trade this live naturally, and I'm going to see you guys on Monday. So have a great weekend, everyone, and chat soon.